Let's assume that you work at the bookstore and the bookstore trades in books. So similar to Bookmark that you may know on campus or Van Skyks. And they've got a couple of important stakeholders. First of all, we've got their suppliers, ZA suppliers, from whom they get their books. Then we've got their customer base, which is largely students on campus. And then another important stakeholder for them is the South African Revenue Services, SARS, which is the tax authority of South Africa. Now let's assume that the bookstore buys books from their supplier to the value of 46,000 Rand as a VAT inclusive amount. It then adds a little bit of a markup on these goods and then sells the books for 69,000 Rand to their customers also as a VAT inclusive amount. Now in terms of the VAT Act, if you are a registered VAT vendor that supplies goods or services to someone else, you have to pay over a portion of the income that you receive to SARS as a tax. So in this example, ZA suppliers, let's assume that both ZA suppliers and the bookstore are registered VAT vendors. So ZA suppliers supplied books to the value of 46,000 Rand. So goods went out of their business and they are thus obligated in terms of the VAT Act to pay over a portion to SARS. And the portion that they have to pay over is going to be equal to 6,000 Rand. Similarly, the bookstore has books in this case, that went out of their business to their customers to the value of 69,000 Rand, and thus they are obligated to pay over a tax portion which you can calculate as 9,000 Rand, which they then have to pay over to SARS. But there's also a little bit of good news if you're a VAT vendor, in that SARS allows VAT vendors to claim back a certain portion from them. The portion that can be claimed back from SARS is equal to the VAT portion of the value of the goods that came into the business. So let's look at our example. The bookstore had goods to the value of 46,000 Rand that came into the business. The VAT portion included in that value is equal to 6,000 Rand, so they can claim back this 6,000 Rand from SARS. So in summary then, for the goods that went out of the bookstore was obligated to pay over VAT to SARS, and the amount was 9,000 Rand, and we call that VAT output. For the goods that came into the business, the bookstore was able to claim back an amount from SARS, and we call that VAT input, equal to 6,000 Rand in this example. The final VAT owed will depend on whether the VAT output is larger or smaller than the VAT input. In this example, the VAT output was larger than the VAT input, so there was an amount that we were still obligated to pay over to SARS of 3,000 Rand. Finally, let's see why it is called value-added tax. The bookstore bought the goods for 46,000 Rand. They then sold their books to their customers for 69,000 Rand, effectively adding value of 23,000 Rand. The VAT on the 23,000 Rand is equal to 3,000 Rand. So that 3,000 Rand is exactly equal to the 3,000 Rand that we determined that the bookstore is owing to SARS. And they've thus been effectively taxed on the value that they added to the books.